Hey, what's up, everybody? It's Paulo Brantz with your Monday market update. Hope you had a great weekend. Hey, if you're a home buyer out there, if you're a realtor out there, you're noticing last week, I'm starting to see things pick up. Would love to hear from you to see what your experiences, what your experience in the market is. But with that, the point of this video is to give you a little bit of insight on interest rates and possibly what to expect in the future. So let's go ahead and get started. So the market is closed today in observance of Martin Luther King Jr. Day. Keep in mind, this is my 11th take. I try to give a little thank you to Martin Luther King, but there's not enough words, there's not enough courage, there's not enough anything in this world to show the gratitude to this man. So that's just what I'm going to say. Thank you, Martin Luther King Jr. Also, thank you to you and everybody last week who took a moment and referred their family and friends to us. It really means the world to us. We're going to take great care of you. We're going to give you the great rates, great service, and we're going to see you to closing. All right, let's talk a little bit about interest rates here. Now, we're seeing a trend again in interest rates and people shopping for loans. Lenders out there, especially inexperienced loan officers, are quoting interest rates with points. All rates here, right there, are shown with 0 points. This is, in my opinion, this is not a time to pay for points to get a lower interest rate, because all the data that we have today is going to showing us, that you're going to have a chance to refinance in 6 months to a year, and we're going to take care of you. So there's the rates today. Now, what's fueling interest rates? Last week, consumer price index, which many of you, if you've been watching this, know this is one of the Fed's favorite measure of inflation, and inflation is the kryptonite to 30-year fixed rates. The higher the inflation, the higher the interest rates. The lower the inflation, the lower the interest rates. So mixed news. The headline year over year consumer price index CPI actually increased. That had a lot to do with shelter costs or housing costs. However, if you strip out food and energy from that, that's the core year over year, actually continued its decline to 3.9. Now, remember, the Fed's goal for core inflation is 2%, which is going to be really hard to get to. So I don't know if the headline year over year is going to influence them to increase interest rates again, keep them stable, or start reducing them. But it's something to watch out, because these are the things right there that's going to move interest rates in this upcoming year. CoreLogic came out and said that housing prices again in November increased by 0.2%, showing a 5.2 year over year increase. Now, it is showing that in December it's going to possibly decrease by 2%. We'll see what the data says when it comes out. It's not out. However, they anticipated 2.5% rise in 2024. Now, I need to note that CoreLogic has been historically conservative. And this next slide here, I believe it's the next slide, is going to show why I think, or perhaps that number could be a little bit too conservative given the amount of households that are forming. There it is. So what I'm going to do is I'm going to bring this graph up a little bit bigger so you can see it. Take my face out of there. This is household formations over housing completions. This is the crisis that we're having. There are too many families being formed each year and not enough houses being built. If you go back from 2013 and not 2014, all the way through 2023, there are more families forming than there are houses being built, which is creating a supply issue. Now, on top of that, you have people in lower interest rates that maybe want to move across town, or maybe get a bigger house, that typically would sell their house and move elsewhere. However, their interest rate that they got a couple years ago is really a deterrent. So that's why we're not seeing as many houses for sale as one would expect. This is why I believe that regardless of what happens to rates, even if rates can go back up, we're going to see increase in housing prices. There it is. All right. This is really cool. So this is something that just came out last week. We had a client come to us that had a 555 FICO score. However, their spouse has an 800. Now, Fannie Mae has a minimum 620 FICO score. This is really important. Some lenders out there, and being a broker, remember, we can choose multiple lenders. Some of our lenders out there, what they do is they will average the FICO score. And so in this case, the 555 and the 800, I wish I would have done the math before this, but I believe it's 670, 680. That is high enough to get their loan approved conventional. So just because you have a bad FICO score doesn't mean you don't have options. Reach out. I would love to talk to you, which means let's talk a little bit about hopes and dreams. What that hopes and dreams is, it's a meeting where we're not going to talk about applications, credit pulls, anything like that. We're going to talk about your goals. We're going to put a plan in place together. Now, if you want to get pre-approved, if you want to refinance, I'm your guy. We'll definitely love to help you, but I want to create a space for you to be able to ask your questions without the fear of having to apply for a mortgage. All right, that's my weekly update. I hope you have a great week. If I can do anything for you, please feel free to reach out to me. Paul Brandt's Clear to Close Broker.